According to Reuters, Asian shares advance, Australia lower as RBA holds rates. Asian shares advanced on Tuesday, while Australian equities remained in negative territory after the Reserve Bank of Australia left rates unchanged as expected. European markets are also poised for a positive start after the Stoxx 600 index briefly touched an 8-month high on Monday. Financial spread better expects Britain's FTSE 100, FTSE and Germany's DAX, DAX to open 0.1% higher, and France's CAC 40, FCHI to begin the day up 0.2%. U.S. markets were closed on Monday for Labor Day. MSCI's broadest index of Asia-Pacific shares outside Japan, MYAP Plus extended gains to 0.6%. Australian shares slipped 0.4% after the RBA's decision to hold interest rates steady at 1.5%, as predicted by all 33 economists polled by Reuters, after cutting them to a record low in August. The Australian dollar rose 0.6% to $0.7626. The decision came a day before government data is expected to show Australia notched up 25 years of economic expansion as of the June quarter. Australia is zeroing in on the Netherlands' gold medal for the longest economic expansion in the modern era, said Craig James, chief economist at Commonwealth Bank. Forecasts are now clustered around 0.5% to 0.6% for gross domestic product growth in the second quarter, with annual expansion seen accelerating to around 3.5%. The fastest pace in 4 years and well ahead of most of Australia's peers in the rich world. Japan's Nikkei stock index, N225 closed up 0.3, with the dollar rising 0.2% on the day to 103.58 yen JPY equals D4, after retreating 0.6% on Monday. While Bank of Japan Governor Haruhiko Kuroda conveyed readiness to ease monetary policy further in a speech on Monday, he acknowledged that the central bank's negative rates may hurt confidence in Japan's banking system. This is a sign that it is becoming more mindful of the rising cost of its stimulus. For those who had been believing in a Kuroda who stresses only the benefits of easing, the speech would have been disappointing, said Mikoto Noji, senior strategist at SMBC Nikko Securities. To be sure, he is unlikely to change his policy framework given that he was preaching the benefit of stimulus. Yet many market players might have felt that the costs are likely to outweigh the benefits in the future, he added. The dollar index, which tracks the greenback against a basket of 6 major peers, was little changed at 95.781. The British pound inched up 0.2% to $1.3322. Sterling touched a 7-week high against the dollar on Monday after a survey showed Britain's dominant services sector had the biggest one-month gain in at least 20 years, beating all forecasts in a Reuters poll. The euro was steady at 1.11475 euros equals E.B.S. Even though German industrial orders missed expectations of 0.5% growth in July, rising only 0.2% from the previous month. Crude futures rose after top producers Russia and Saudi Arabia confirmed they had agreed on Monday to cooperate on stabilizing the oil market. U.S. crude CLC1 jumped almost to $45.31, while Brent crude CLC1 was up 0.3% at $47.76 a barrel.
Thanks for watching. Do not forget like, subscribe and share with friends. Thanks for your support.